What is going on, YouTube? I am Germ here. Today, as you guys can see on the screen, I want to talk a little bit about Fiverr. This is ticker symbol FVRR. This is actually a company that I like a lot, a service that I have used before, I am a fan of, and I think has great potential going into the future, but actually a stock that I do not currently own and haven't really owned recently because of some of my concerns about the valuation, about the short and medium term growth and potential of this company. Because again, just because I like a company, just because I think it will grow into the future, just because I do think it has an awesome opportunity and it has a really cool service, doesn't necessarily mean it is a good stock to own. And as you guys can see up on the screen, it was down 24% today. Now, yes, they did have earnings, so this obviously played a massive part of that, and we can dive into that and figure out exactly what is going on for Fiverr in both the short term and the long term. Are things going to keep going down? Is this a great time to buy? Is it time to keep staying away from this? We'll talk about all that in this video today. So definitely drop a like if you guys do enjoy this video. I'd appreciate it so much, and subscribe to stay up to date on all my latest content. We're trying to hit 1,000 subscribers. We're getting there slowly but surely. With your guys' help, we can get there a little bit faster just by clicking that button really quick. With that being said, here we go. So we have, first off, we can just take a look at kind of the stock over, the last couple periods of time. It actually has a $6 billion market cap, so it's a decently sized company. It's not a huge company, but it's not a super small company. And the stock has been very volatile over the last 6 months, being down now 37%. But kind of before today, it was only down 17% over the last 6 months. Year to date, same kind of story. You see how many ups and downs this company has. I mean, from here to here, it's up 56%, and then right after that, it's down 40%. I mean, it just keeps going up and down and up and down and up and down. This company has obviously been on the stock market for right around 2 years now, and in that time, it is up 455%. So this has been a big winner during its time as a public company, during its time on the market, and people have definitely made a lot of money trading Fiverr, because Fiverr is a company that has been around for a while, even just in the terms of like being pretty popular. It's been fairly popular for, I want to say, like 5, 6, 7 years, something like that now. So yeah, kind of interesting stuff. People have definitely known about this company. Obviously, it's been a big thing on like YouTube and social medias and just on the internet in general, but it's definitely seen a big explosion. I mean, really starting as soon as COVID hit, this started going crazy, and a large part of that is because people were staying home more. People were looking to make more money online, make more money from home. People lost their jobs. They needed to become a part of, the gig economy that they're calling it and stuff like that. This was great for Fiverr. But the news today, this is an article from Motley Fool, why Fiverr stock dropped 24.8% today. Because again, a single day drop like that, 24% for a company this big, that's pretty crazy. That is definitely eye-opening. So growth was a whopping 60% last quarter at Fiverr, which is crazy. That is massive. But the guidance does indicate that growth may have stalled out as the pandemic is coming to an end. Now, obviously, the pandemic's coming to an end. We don't know exactly what's going to happen. We've heard multiple times now the pandemic is getting closer and coming to an end. But now the Delta variant's popping up more and more. Emergency rooms are filling back up. There's more and more mask mandates and stuff like that coming out. Who knows how bad things can get? Who knows how bad this next winter is going to be? Now, I really don't expect that the kind of insanity and overall scared feelings are going to ever be as crazy as they were at the beginning and middle parts of 2020. But that doesn't mean that the best days are necessarily, only good days are ahead from here on out as far as the pandemic and everything goes. So, I mean, we'll have to see. Fiverr could definitely rebound a little bit from this, but obviously a lot of their valuation, a lot of their increases were pushed heavily by COVID. Now as things are slowing down, the stock price is going to take a hit because people were pricing in just future insane amounts of growth. I mean, the valuation of this company was really getting overblown, and I would assume even after a 25% drop is probably still pretty overpriced. I haven't really dove super deep into the numbers. I've been at work all day today. I'm just getting home and stuff, but I would assume it's still in the the overpriced category as far as these things go. But shares of the online marketplace for freelancer Fiverr dropped as much as 25% in trading on Thursday after reporting their second quarter earnings. Results for the quarter were downright outstanding. Revenue jumped 60%. Gross margin was an incredible 83.4%, and non-generally accepted accounting principles, net income was $7.9 million or 19 cents per share. Analysts were expecting 14 cents per share, so they beat the analysts' expectations. The results look great, so why is the stock down? The answer comes down to guidance. Management expects revenue in quarter 3 2021 to be 68 to 72 million, down from quarter 2, and growth of just 30 to 38% versus a year ago. Again, when you take a look at this quarter, they grew 60%, and in the next quarter to only be growing 30 to 38%. That is a big kind of knock off of their growth, and that's still great growth. 30 to 38% growth is still insane, but the current valuation of the stock and what people are hoping for and wanting and what the stock was needing is obviously still much, much higher than that to see a 25% drop in a single day. Management said the relatively weak results are the result of some more normal business activity and less remote work, which is hurting the freelance market. And again, I think that makes a ton of sense. In the short term, the freelance market is definitely going to cool off a little bit, the gig economy, all that stuff. But I still think there is a place for it. And I think this is still a market and a sector that will continue to grow. Now, Fiverr is not actually the top dog in this space. I believe Upwork is the #1 player in this field right now. And even they were hurt by, obviously, Fiverr, saying they don't really expect to have as much growth. They expect things to cool off. This stock was down 10%, which I really thought was interesting as well. But I think if you zoom out, if you look ahead now 5, 10, 15 years into the future, I definitely think this will be something that comes back better and stronger than ever. And Fiverr and Upwork are definitely stocks that I'm still going to be keeping on my radar, even if I'm not necessarily interested in them right now. If sentiment does start to change and they start to drop and they start to fall, and we get to a point where these companies are undervalued or oversold, I'm definitely considering buying these two companies because I'm a big fan of what they're doing, and I do believe they are going to play a big part in our future. But maybe the valuations don't make a ton of sense right now, at least to me. But that's pretty much it for this video today, guys. Definitely drop a like if you did enjoy it. I'd appreciate it so much. Leave a comment down below. What do you think about Fiverr? I would love to hear your guys' thoughts and opinions. Subscribe to stay up to date on all my latest content. Hopefully catch you guys in the next one. But until then, peace.